All right, all right. Welcome back to the Blockument, crypto education through everyday conversations.
Welcome.
Welcome. My name is Nate Talbot. I'm the executive director of Detroit Blockchain Center. And to my right is the magnificent, I even wrote it down, magnificent.
It's in the notes, folks.
It's in the notes.
I am Ashley Rose. I am your everyday girl. I'm a mother, an online reseller, and I am just on a journey to figure out what the heck is going on in this Bitcoin crypto space.
All in the space. Nice. Mm-hmm. Today we are talking about what are tokenomics, the economy of blockchains, because you were so eager to learn all that stuff.
Yeah. Everybody, I hear people talking like tokenomics this, tokenomics that, or blah, 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 blah. And I'm like, literally, I don't know what you're saying to me. This is a different language.
Yeah. Well, we're going to try to translate today. But first, let's see where we are in the block height.
Oh, yes. That's why I have my phone out.
It is.
All right, we are at block height 788,645. This block was won by Via BTC. The total subsidies and fees that they won are 7.961 Bitcoin, which equates to 230,587 USD. The size of this block is 1.37 megs. Mm-hmm. And the total number of transactions in that block were 2,626 transactions.
Nice.
Yes.
There's a lot of more fees getting driven into the chain these days.
Yeah, I was gonna say that number kind of went up by a lot.
Yep. The fees are pretty high comparatively speaking for historic Bitcoin prices right now. I think right now the average fee is, I don't even have to guess. Let's take a look. The average fee is someplace around $7-8 for a high priority transaction, which is fairly high. There's a lot of alternate use cases Bitcoin is getting used for these days, like inscriptions and stamps and all these other NFT-esque things people are doing. Yeah. So it's the big debate around this block height right now, which is this really a permissionless, censorship-resistant network where, you know, as long as you're not breaking the rules, you can do what you want to do? Or are people spamming the network and it's just garbage that we need to find a way to stop? That's the debate, and I'm not answering any of that.
Yeah.
Because today, like we said, we're talking about what are tokenomics,
yes.
The economy of blockchains. So lead us off. Ash, what are tokenomics? What does that even mean?
The economy of blockchains. No.
It is the economy of blockchains.
Yeah, I just, I'm looking for a deeper answer, though. Like, and that's what everyone always says to me. It's the economy of blockchains. And I'm like, okay, but it has the word token in it. So now I'm confused.
A lot of times when people are doing like investing in things in the space and one of their whole DYOR, do your own research, you'll hear the influencers tell them like, oh, what are the tokenomics?
Right, yeah.
Well, you do investing, right?
Here and there.
When somebody tells you what are the tokenomics, what action do you take? Do you just sort of like glare off into the distance like, I don't know what you're talking about, or do you try to do... Does it mean anything to you?
I mean, it means something to me, but I'm not sure exactly what it is. I mean, I will usually turn around and be like, can you explain this to me? Mm-hmm. And then don't really do that work myself. I let someone else to help me. So that's why I'm here to figure out what's going on.
Oh, well, let's not buck the trend.
Yeah.
All right. So tokenomics. It's, some people will tell you it's the economy of blockchains, which is an accurate description. It's like, how do the economics work? Other people, and I sort of lean a little bit more into this camp, which is tokenomics doesn't exist. There's economics. And what you're really talking about is what are the economics of blockchains. Economics doesn't change just because you throw a blockchain into the space, right? Mm-hmm. So if you're going to use the term tokenomics, maybe some definitions help. Mm-hmm. And one of those definitions would be, if you're going to say tokenomics, my definition of that is just regular economics, but how does it apply to a how does it apply to a system without a central authority? Most economics throughout history always had some kind of central authority. You have banks or governments or whatever institution, right, that would run it. In the corporate world, the board is the economic sort of driving force, right? And it's really it's easier to make those kind of decisions around economics, whether you're talking about like base supply and demand stuff or more advanced figuring out fair market prices and valuations and whatnot.
So is this where like market cap and like daily volume, is that where that comes in, or is that kind of like just surface level?
No, I mean, I think it's sort of surface level. That's like after you figured out the economics, those would be possible indicators of how your economic design
Because that's kind of when you asked me that, I like didn't think it through, I guess, the best. but now that's my answer. That's kind of what I think of when someone's like, oh, here's a tokenomics. I don't know. That's why I think of that.
Right. So there's two approaches, right? If you are an end user, the investor type or whatever, that's exactly where you should be looking. You should be looking at, all right, what are the economics of this? And, a lot of this does not, some of it's going to pertain particularly to crypto projects, but this is, again, any business you want to do. You sort of have to, as an investor, you're going to look at the surface level stuff, the market cap, pricing histories, things like that.
Yeah.
And then you work backwards from there to see, all right, is this authentic? Is that market cap real? Is it really representative of the value, the actual value? That's the price of the company, right? A market cap. But does it equal the value of the company? And that's how you'd make like an investment decision there. You would say like, all right, no, this doesn't equal the value. It's really undervalued. That's a good strong buy signal. Or no, that's really overvalued. That's a very strong sell signal, right? But you have to go deeper than that, and you got to work your way all the way back. And as a company or individual starting a business or a developer or anybody working on any kind of project, you got to go in reverse. You have to figure out what are the rules I'm going to set my business or infrastructure from that will drive good end value, things like market cap and whatnot. So tokenomics is just economics pertaining to
tokens.
Yeah, blockchain type systems, and even broader than blockchain based systems, I would say tokenomics is how do you do economics without a central authority. That's the challenge of any kind of blockchain or crypto-based.
So it's like decentralized economics?
Yes, but I try to also avoid the decentralized word. Without the central authority, there is nobody to tell you this is how it's going to work, right? You have to come to you got to come to a consensus. It's like a pure democracy.
Okay.
We all sitting here, we have to agree this is what it's going to do. So we got that. I think there's a couple other base definitions, like what is a token? A lot of times people use coin and token interchangeably. We sort of covered this. And as before I get too deep into it, this is like a 201. It's arguably a 301 type topic.
But we're going to take it down.
Yeah, we're going to try to keep it at a 201 level, but you should go back and check out like the what is money and money versus finance and do your own research episodes to get a really strong base understanding and some core definitions that might pop up here. But as a quick pre-101, so token versus coin, right? Coin, when you think about like Bitcoin, Ethereum, any coin that represents base level utility on a chain, like a L1 chain, a layer 1 chain, go check out the layer 1, layer 2 conversation. Those are coins, right? When we have to talk strict definitions. Tokens are assets you build on top of layer 1, right? So Ethereum is the most popular one. You have your ERC20 tokens. Those are all tokens. Those sort of do local economics. Ethereum is the driver of the main economic platform, right? So that's for the token. You're going to hear a lot about inflation, deflation, right? Inflation is just when the supply goes up. Deflation is when the supply dwindles down and trends to zero, right? And I'll throw on there's also tally missions. Tally missions is when you have like a deflation type setup. but it never trends to zero. It trends near zero and then sort of flats out. So Bitcoin, 21 million cap, right? There'll never be more than 21 million Bitcoin, trends right to zero. Ethereum is inflationary by issuance. We'll get into some more. It's a little bit more detailed than that. It's inflation by issuance, though, which means the supply, there is no supply cap. It'll always issue new tokens, right?
Okay.
And then you have something like Monero, which is deflationary, but has a tail. So it's going to trend towards zero, and when it hits a certain level, it'll just keep issuing that same known supply from that point forward.
Oh, okay.
Right? So those are the three main things. And then last thing you should be aware of before we get in is very basic game theory, right? We talked about game theory a little before. Do you remember anything about it?
It's like your strategy for doing something.
That's pretty it. It's a strategy for doing something.
Yeah.
How do you align that, right? In most crypto projects, you have two approaches. Game theory is its own full economic study, but very small parts out of that. Bitcoin uses a game theory design called competitive game theory, right? I don't trust anybody. I'm out for my own selfish needs. This is why you run your own node. You don't trust, you verify. And you assume everybody's cheating, and that way you can't get cheated, really, right? It doesn't really matter what another party does because I'm not depending on that party for my own node.
Right.
Versus something like a proof of stake system is more competitive, cooperative game theory, right? That game theory is, well, I'm going to assume most participants are good actors, right? Most people want what's best for the network. If somebody cheats, we'll punish them, and that's why you have a stake. You put in a stake, right? You're putting up some kind of collateral, usually the native token or coin. You'll put that in, and if you're a good actor, you'll receive incentives. If you're a bad actor and you get caught, then you get punished and your stake gets slashed. They'll take some or all of your stake, right? So in both systems, you're incentivized to act in best of the community. How well either one does is debatable, which is why you have multiple consensus mechanisms, right? But that's the general of that. Any questions about any of that before we dig deeper?
No, surprisingly.
All right. Somebody's going really, really good on their educational journey.
I do think that it's interesting that inflation and deflation are like something about the supply, which is interesting because I feel like nowadays we don't think about it in that way. We think of it as like value go up, value go down.
Or more specifically, probably prices go up, prices go down.
Yeah.
And that's a very important thing when you're talking about tokenomics, even and economics. Is when I talk about inflation to people, typical inflation that you see in markets, prices going up does not equal inflation. Right? You could have a business, you could have two coffee shops. One coffee shop just decides to raise its prices. That's not inflation. That's somebody just raising prices.
Yeah.
Right? It's when entire sectors are forced to raise prices because cost of production goes up.
Yeah.
That's when you're starting to see inflation. And it's not that the prices are going up, it's how many core assets or core goods you can purchase for $1.
Yeah. Well, what I was thinking is like the supply. So like there's more dollars fighting for the same thing. So, right or no?
Yes, that's a supply and demand issue. These all tie in together.
Yeah.
Yes, that happens when you print a whole bunch of money. Right, you have more supply, but that means every individual dollar loses its purchasing power. If there's only $100 bills, right, or $100 total, I don't care if it's bills, coinage, whatever. If you have $100 of the total supply, that's all there exists, right? For a penny, you could probably buy a house.
Yeah.
Because a penny, the value of a penny is so high, right? But if I double the supply of money, if I make $200, that penny can now only purchase a half a house. So how much house you can buy for a penny has gone down.
Yeah.
That's inflation.
Yeah.
Versus in deflation, if I had $100 and I cut that in half and turned it into $50, and we just got rid of half of the dollars as it came through the banking system, they just burnt it, right? Well, now you have deflation, which means now you can buy a house for a half a penny. Your purchasing power goes up, which could also be problematic. People are always scared and, fight against inflation, but rapid deflation is also a problem.
Yeah.
Especially if you want to build up an economy.
Yeah.
So, you got
I just
it.
thought it was an interesting thing to notice,
Yeah.
point out.
Yep. So at the end of the day with all of this, right, we're basically talking about value creation. And that is what tokenomics and economics is really about, value creation. If you're going to create something out of thin air, which is what essentially most projects are doing in the crypto space, they're creating something out of thin air. What drives that value, right? Now, a lot of crypto detractors would say, call that intrinsic value. I'm not a big believer in intrinsic value. Like, it exists. I don't, think the concept is made up. I just don't think it drives value because if you take somebody with gold, right, they're going to be like, well, gold has this intrinsic value. You can use it for computers or jewelry or whatever. Cool, but that's not, what drives it because let's say the end of the world happened, right? You take it to an extreme. Who cares about gold? You want water. You might want bullets. You might want a couple other things.
Yeah.
You can't sleep in gold. You can't eat gold. So sure, you can floss it, right? But you can't do anything else with it. So if intrinsic value mattered, water would be the most expensive,
Yeah. That's a
highly
very good
valued asset on the planet. It's not. You could go grab yet.
point. Yeah, yet.
Yeah, water wars could be coming, but as of today,
that's a whole other topic.
well, just think how much can you buy a gallon of water for?
Yeah, actually, it's more than what it used to be.
Well, yeah, you got inflation.
Yeah.
But you're still paying under $2.
Yeah, a dollar something.
Right. How much would be a gallon of gas?
Like $3.50.
And a gallon of milk?
Probably. I actually don't know.
Yeah.
Like $2 or $3.
You got those Bill Gates problems. I don't know how much common human things cost.
Well, it's just you need it, so I don't really. I'm like, whatever. It doesn't matter how much it costs. I got to buy it.
Right. So intrinsic value holds little value, in my opinion, to most things. It's not a good indicator. It's just a good sales pitch if you're trying to sell something, right? Yeah. But you're still talking about value creation. And in crypto, you have value creation, but then you also have value extraction. And this is one of the big areas where a blockchain-based system comes into play because it eliminates value extractors in a lot of different sectors, right? Those needless middlemen. You used to have to, with Bitcoin, you had to, I want to send money to the other side of the planet. I got to use these financial rails.
Yeah.
I got to trust institutions. Now I can do it directly, right? Without those. So the value extractors in the middle, like MoneyGram, get cut out. But value creators, let's say an exchange like Coinbase or Gemini or Kraken come along, they make the transfer of dollars to Bitcoin or Bitcoin to Ethereum. They make all of that frictionless for a basic user. They're adding value. So we got rid of one middleman, but you got another middleman that's more useful, sort of taking their spot. So you have this value creation and value extraction piece, right? So when you're building a project, a lot of that is going to be what is the utility. When you're looking at value creation, you're looking at what is utility, right? And in most projects that we see, you have a couple key points. You have
and utility meaning why does somebody want this, or how are they going to use it? That's going to make them want it.
Yeah, I think want could be, right? You can build a speculative market. So why do they want it? But the real driver would be why do they need it, not just want it, right? And there could be a few things. If you're doing voting or governance type situations, right? How does that utility sort of drive it? and what are the economics based around that? What are your, if you're talking about access, so that could be like anything from when you hear about NFT projects that get you access using the NFT like as a ticket, right? And access could even be like with the fees. You have to pay a certain fee structure in this native token in order to access the system. Tokens can be used for security. Especially, I know there's a couple DeFi projects like Thorchain, which is like a decentralized, I think custody free. They don't ever take custody of it, but it allows you to do coin to coin transfers. I can transfer Ethereum for Monero, Monero for Bitcoin, all without needing a custodial middleman like Kraken, right? It's all done through smart contracts and whatever. And they use their token, their tokenomic design. And none of this is a vouch for any of these token systems that I'm mentioning. They may work, they may be garbage. Do your own research. But that's one of the reasons they have their own token. And sometimes it's speculation, sometimes it's fundraising, right? The ICO boom, and I think that ICO boom still exists. It's just more cleverly shaded now. But a lot of tokens exist just to fundraise for the core developers. And so part of their tokenomic design is how do they do distribution, right? How much is allocated towards my VC investors? How many are early investors? How many is going to the development team? And whatnot, versus how much is fair distribution.
So would that be kind of like a scam like coin?
Not necessarily. It depends on what you're building. Now, yes, again, we're talking about crypto markets, so I think I'm one of the top crypto blockchain ecosystem believers on the planet. 99% of all of them are scams. So, yes, a lot of them probably are scams. And that's not coming from a place of hate. It's just like when you have no central authority, who stops the scammers?
Yeah.
So it's rampant for that. But there are legitimate projects that would still have these like VC raises or ICO raises, or I don't think unfair distribution is the right word, but it's not totally equal permissionless distribution. And it's still not being a scam. They're just fundraising, right? It's like, hey, I want to build this project. I want to build it utilizing aspects of censorship resistance or permissionlessness or transparency. But I can't afford to just do it for 5 years, right? I was really naive when I first got into this space. Bitcoin was given to the world for free. And then Satoshi left. It was the most altruistic thing you can do. And I thought like, oh, that's how everything's got to be built. The whole system has to be altruistic. Like nobody can, how do you benefit for a public good? Yeah, I was wrong. But because a lot of people are building very self-interest projects on it that are beneficial, can be beneficial to society, but they need to think about tokenomics. So those are the key aspects, right? You're sort of looking at creating value, what's the utilization, and how is that going to be used? And more importantly, not just how it's going to be used, you have to be very contrary yourself, almost like a security expert. You have to say, how is this going to get exploited, right? If you're building a governance token, you want a DAO or some kind of system that's run by the community. Well, okay, we got to issue some voting tokens because that's the only way you can vote if you have a voting token. All right, well, who gets the voting tokens? Who controls most of the vote? If a majority of the tokens are distributed to a handful of VCs and developers, what's my vote really do? Yeah. Right? Let's say you fair distribution it and the developers and VCs have 0 to less than 5% of the total supply, and you issue 100% of the supply. How are you going to overcome voter apathy, which is just a problem off-chain, right? Think anytime anybody goes to vote, how many people vote in elections they care about? Yeah. you're lucky if you get 50% of the voting population to go vote on something they're passionate about.
Yeah.
Who's going to vote on, like,
Yeah.
hey, should we curb the emissions trail by 0.5% year over year?
Yeah.
So how does that economics fade into play, right? Same thing when you're talking about, like, fees. A lot of places will talk about fee issuance and how they lower fees, but it's like, all right, well, what are fees around for the first place? Why do we have fees? And do cheap fees matter? We were just talking about at the top of the show, Bitcoin has some of the highest fees it's seen in maybe 5 years or so, since like the 2017 bull run. They're not that high, but I haven't known this long of a sustained period. It's been like this for maybe about a week or so, where the fees are like $4, $5, $6, $7, $8.
Aren't fees like the incentive to keep it moving, like to keep the project going? Because it incentivizes the people who are like the nodes that are checking everything, or like people who are staking, or.
Yep. Fees, well, it depends on the project. This is why it's part of the economics of the system. So fees in Bitcoin is how you incentivize the miners. The miners are how you keep your time chain, this distributed chain. You have to have a single source of truth and who's verifying it. And how can you trust those verifiers? And that's what proof of work is all about. And how do you incentivize these people who are about to spend a bunch of energy and money on energy and hardware? How do you incentivize them? Right? Well, we'll give them a subsidy of some Bitcoin, and then, but that's deflationary. That's going to go to zero one day. So how are they going to get paid after that?
Yeah.
You got to have enough fees to pay for them, right? So that's why you have fees in something like Bitcoin. Versus Ethereum, you have some of those basic same tenets, except now Ethereum's proof of stake. There is no energy being burnt, as they'll advertise aptly, right? They've reduced their emissions 99 point something % compared to their proof of work system. So why do you still have fees? Why do you still have high fees? Fees are high right now on Ethereum. Because one project, which tends to be the Ethereum trend, one project will raise all fees. Right now, you got that Pepe, jacking up Ethereum fees. But why do you have why do you really have fees on Ethereum? Because you're running smart contracts, you're running computer code, and if you've ever done any kind of programming, you know one wrong line can make a program run infinitely. Right? Because it's just really there's these things in program called loops. So it's like, hey, if this, then do that. When this condition is met, stop doing this. And then it just keeps running. But what if you made that, if this condition met, what if you write that wrong? The condition's never met. It just takes up computer resources. And for traditional programming, it just crashes your computer and you do a reboot. But on a world computer like Ethereum, it can crash the entire network. And now you're building global finance on top of that. You can't have a system that just goes rogue. So you have these fees. That's what your gas is. It says, well, this is the computation you want to do. How much are you willing to spend on this computation? And when you run out of however much you're going to spend, when you run out of your gas, the computation stops before it takes down the network. Right? So those are two different models just right there on why you have fees. So how you build your system around that is going to change entirely. You can't take the economics of Bitcoin and then go build some other layer one chain that's going to use computational power, smart contract systems, and have the exact same economic policy. Because you're serving two different needs. It's like saying, I want to go start a fast food business, so I'm going to go study this lawnscaping business to figure out how I should run the business. Right? It doesn't make sense. Two different economic models. So yeah, those are the base tenets of crypto economics, right? We still good?
Yeah.
I'm doing a really good job. Ashley doesn't have any questions, or you were really a master at this already, and you should be teaching it.
No, I mean, there's like a lot. There's kind of a lot. We're taking on a big subject here, it seems like. There's like a lot of moving parts because it's like trying to tackle economics, like you're saying, and then also adding on like blockchain and other projects and different coins.
I think the best way to think around this, though, is really bring it back to the basics. Don't think about tokenomics. Think about very base economics. What makes an economy drive? What makes any kind of economic ecosystem drive? What are you building? If you're building a DeFi system, right, you want to build a decentralized exchange. What are the economics that drive that, and what do you need? And be honest about what you really are talking about. I think in this space, a lot of definitely a lot of end users get lost in the sauce.
Yeah.
They have zero idea what's happening, so they don't even know how to properly evaluate it. They'll do what you do, or what you were saying is, which is like, I'm going to go check out the market cap.
Yeah.
And then divide that by the supply, because that's how much the price of the coin's going to be, and then is that overvalued or undervalued? I've done my homework. But how do you know the supply issuance even makes sense, right? I get on Bitcoiners a lot because the ones who focus on the 21 million cap, like you want hard money and this cap is what does it. That's not what does it. Like, it's like people who say blockchain, not Bitcoin. Like, blockchain has some magical property, right? It's literally a distributed database.
Yeah.
It has no magic properties. It's important for these systems to run, but it's not like, oh no, that was the magic sauce.
Yeah.
Right? Hubcaps on cars or transmission in a car, that's the magic behind motor vehicles. It's like, no, not really. It's important. It's not the thing. There was a point to all of this. Oh, the 21 million, the 21 million cap. So like, there's tokens out there that are like, oh no, you think Bitcoin's good with 21 million? We only have 5 million tokens.
Yeah.
So boom, better money, right?
Oh, but there's other factors to it.
There are other factors to it. That's not. It can't be your economic base. But I've literally watched projects launch who their whole selling point was, we have a stronger cap than Bitcoin. We're just like Bitcoin, but we have even a more limited supply. Therefore, we're more valuable. And it's like, that's not how the economics work, right? For Bitcoin, it's just knowing the monetary policy that's unchanging. And then you have totally different systems. So in Ethereum, as an example, right, they have a very interesting economy, a tokenomic structure. We said earlier they have this infinite supply. They have to have an infinite supply because they're they have more actual token utility than something like a Bitcoin. Bitcoin's utility is store of value, and eventually, in some parts of the world now, even here in Detroit, because I use it like this, which is a means of exchange, right? I pay people in Bitcoin. But most people use it as a store of value. Where Ethereum, it also can be considered money because people are transacting in Ethereum, but you also need Ethereum if you want to use Ethereum. There's nothing you're doing on Ethereum L1 where you're not paying for that in Ethereum because of the computation thing, right? If I just want to send you Ethereum, that's very low computation, so I'm going to pay you the least amount of fees. But if I want to do something on a DeFi network, if I want to use like Uniswap and exchange some Ethereum for some Link, right? I need to, that DeFi platform is executing smart contracts. So I'm going to pay for a fee. I'm going to pay for a fee to send my ETH to this smart contract. Then I'm going to pay for a fee for basically every execution that DEX has to do in order to convert it to Link, which could be like 15 different things. So I'm paying that fee 15 times. This is why my fee is all of a sudden $50 or $75. When the network's clogged up. Sending you ETH could be like $5, but running the DEX could be like $55 because I had to do 10 times the execution.
So a definition for tokenomics could be just how you're creating value through your project?
Yeah, that's a piece of it. How you're creating value, how that value is sustained, and then how do you a thing with economics in general is there are always market things that happen in the market nobody can predict, right? And no matter what any project you name fits it. You know me, I always go back to Bitcoin, even Bitcoin.
Yeah.
Pools, mining pools, was not conceived when Satoshi first created Bitcoin. Everybody was a miner. He didn't have a concept of a mining pool, right? That's something the markets just created,
Yeah.
right? For more market efficiency stuff. So very sound economic design or tokenomic design would pre-think and include those types of things, or at least be prepared for when those types of things happen, those unforeseen. You plan for the unknown, plan for the unplannable.
Yeah.
You have to do things like that. Ethereum, and this is not unique to Ethereum, any smart contract platform that allows finance to happen. So it's very rare to see a lot of this on Bitcoin because it only does money. But anything that does smart contract stuff, you have the whole maximum extractable value. Used to be minor extractable value, right? Which is just finding out how do you be who is the most sophisticated economic actor in any kind of arrangement. I want to do a basic trade on Uniswap again. I'm not very sophisticated, right? I'm pretty Stone Age with it. So I'm just like, trade this for that, go. But you could be way more sophisticated. You could see that. And so MEV is an area where you can come in and sort of front run me, pull out some value. My cost may go up marginally. So I'm paying a little bit more, but that would have been wasted economic activity otherwise, right? It's almost like flaring, right? I'm this manufacturer. I got so much energy, I can't use it all. I'm going to flare it into the atmosphere. Well, people do that with economic decisions all the time. They flare value, and it's just wasted value.
Oh, wow.
So somebody comes along and sees that and finds a way to sort of collect it. But that was not thought of in Ethereum's base design. And it wasn't even discovered until around, I think, 2018 is when you first started hearing even talks about MEV. And it didn't become a main thing people were really, really big on until like 2020.
So the tokenomics got stronger in that instance because of that?
That's arguable. That's a debatable. But people noticed some market forces that weren't planned in the original economics, and then you have to start changing the economics of Ethereum to best suit that new unforeseen thing. So some people, when it comes to like MEV, some people think that's the worst thing in the world, and they want to find a design that eliminates the possibility for MEV. You have other people who are like, well, this is an unavoidable consequence of these types of economic environments. You can't get rid of MEV. How can we best manage it? Front run the front runners. So at least everybody knows and is aware that it's there and can sort of add it into their base cost, right?
Okay.
So that's how you deal with it, is all perception, or opinion. But yeah, it can get complicated. But most people don't even think this far ahead. So if you're designing a project, I talk to people all the time, and they're like, ooh, I want to like start a DAO. It's like, cool. Well, what's the DAO do? It does X, Y, Z. What it does is sort of irrelevant, right? It's like, all right, well, how do people have a say? Oh, they use a token, and they just vote. All right, well, is it like how many tokens has a stronger vote? Yeah. All right, so whoever has the most money gets the most say. Well, no, we're going to be fair. All right, well, how are you going to be fair?
Yeah.
Well, we'll airdrop the tokens. All right, but I can go onto the market and buy the tokens? Yep. So what's stopping somebody who's not even involved in the DAO from coming in and accumulating a high amount of the tokens and voting the way they want to vote when it's convenient to them? You know, they don't think through a lot of those base, and that's just the base economic, right?
Yeah.
So these are the things when people build, they have to start thinking about. And if you're going to be an active participant in one of the communities, if you're going to be an investor in any of these, that's why I say you have to work backwards. You don't have access to the full thing, but this is what a real white paper is supposed to talk about. Most white papers are marketing brochures, not really white papers. if you don't start seeing funny math that you can't understand,
Yeah.
like is this a math equation or is this like a college frat? I can't tell, right?
Yeah.
If you're not starting to see things like that and words that you probably don't understand unless you're an advanced cryptographer, it's not really a white paper, it's a marketing paper. And if they can't find a real white paper, it's probably because there are no real tokenomics. It's really like, we're going to talk about some stuff, but really we just want you to buy this token up front so we can take that money, give you tokens, and that money being maybe it's dollars and stable coins, it could be Ethereum, it could be Bitcoin, it could be whatever they want, that has real value and well thought out, at least economics, because it has some kind of value. And you're stuck holding the bag while they hopefully work on a project as a fundraiser. And this is why it's like you have the SEC and all of them step in on some of these projects. I'm not vouching here for the SEC and Gangsta Gensler, but this is why they would step into a lot of these projects. You know what I'm saying?
Yeah. Yeah, that's interesting. Part of me is like, okay, if you just call it fundraising, could that be like a new, like a GoFundMe situation where like, okay, this token, or like, does it have to have like a solid reason for it to be there? Or like, could you be like, okay, I'm going to start an Ashley token because I want to pay for X, Y, and Z, or like, you know, my dog needs this.
That's exactly what people do. And this is why I fold more with the camp that says there's no such thing as tokenomics. There's just economics. One of the first projects that really caught my attention around all this was Akon's coin, right?
Yeah.
Money for Africa.
Right? Wasn't he using it like XLM or something like that? Or
he's been. I don't. We won't get too deep. I don't remember. I don't know.
Okay.
The point is, like, from a project like that, and around the same time, you had people, because the marijuana industry was starting to boom in the U.S., a lot more states were making it legal. So you're like, oh, we're going to make weed coin, right? And then you had the coin for dentists. And it's like, all right, let's step back for a second. I get the speculative hype because everybody wants to get rich as hell overnight in very little effort with very little capital at risk. But if you agree there's some kind of sound money already out there in a permissionless, censorship-resistant manner, and at those times you were looking at either Bitcoin or ETH, a couple other exceptions like Moneros and things like that, but I'll just use those two big, right? You have Bitcoin and ETH. Some fundamental differences, but most people agreed in one of the other camps or a mixture, these have economic value. If they really have economic value, why do I need to create a whole nother token just for dentists?
Yeah.
Why can't they just use one of these? They're permissionless. They're censorship resistant. They're distributed.
Yeah.
Right? Why do I need a coin for black people? Like, this is going to help black America. It's like, well, yeah, we need help financially because we've been cut off of systems, but at the same token, why do I need my own special coin? Why can't I use just Bitcoin?
Maybe it's just like the marketing piece, like they want to.
Well, but why do I need marketing pieces if you already have something else? Why do I need a marketing piece for something new?
Yeah.
You could do.
Well, people like to belong to something.
Well, you have his name's slipping my mind right now, but he wrote a book in like 2018, 2019, Bitcoin in Black America. Like, this is the money for. This money, good money, is money for everybody. That's sort of the point. You don't have to make a coin for any specific subgroup, right? I don't need a Bitcoin for this business. I don't need a Bitcoin for this ethnic group. I don't need a crypto for certain gender.
Yeah, like this, like, so we have the USD, and then there's stores. Like, there's not like a Walmart dollar or like a Walgreens dollar.
Right. Unless they want to capture you into a system and keep you in the system. Right? Walgreens does do this, right? This is why you have the rewards points.
Yeah.
Airlines do this. Why they have the reward. They want to capture you into their system and keep you there. Video games, they do it. They want to keep you in the system. Starbucks. Right. But that's about capturing and extracting away value that they otherwise wouldn't have. Starbucks isn't incentivized to team up with Dunkin' Donuts, Tim Hortons, and all these other places and make a coffee coin.
Well, then if that's the case, then that's probably the reasoning for starting a dentist coin or a coin for Black people, or because they're looking to extract the value from that group of people.
Exactly. So if you're an investor talking about getting into this group, when you're starting to think about the tokenomics, start to think about what does that really mean, right? What is the real sustainable value of a token just for dentists?
I guess whatever.
There's not one. There's
I was
not
just say
one.
whatever coin's backing
It just sounds
but
good if you're speculating on it.
Yeah.
But there's not one. There's not a good reason for 99 point, at least 5% of these.
Yeah, the hope of getting rich, I guess.
It's the hope of getting rich.
Yeah.
And if that's what you want to, I'm not here to tell you how to spend your money. If that's where you want to spend it on a sort of a lottery ticket or a penny stock in crypto, go for it. But realize that's what you're doing.
Yeah,
you're
that's
not
a
really
good point.
investing into the next best thing the world's ever going to see. You know what I mean? So those are some of those key aspects you have to sort of look at. And going backwards, looking at things like market cap. We've talked about like the attributes of money before. What is money, right? That's the 3-point system. But then you have like the attributes of money too, like what makes good money, right? And things like divisibility, acceptability, portability, resistance to counterfeiting, scarcity. There's like 6 of them. Those are all things you have to, if you're trying to make a value system in your economic system, right, in your crypto economic system, do you fit all of those different areas? And if not, how are you counteracting to do that, right?
Yeah.
Counterfeiting, a lot of like L2s have to worry about the counterfeiting thing. This is why they're layer 2s. They depend on the security and the sort of censorship resistant of that base layer they're on, because they can't provide that level of security.
That is very interesting to me, because it's like, then why would, like, based off of kind of what we've said, like, why would you really invest in anything outside of like Bitcoin and Ethereum, other than because you want to get rich? Like, but some of these things are like tackling real issues, right? Like,
their stated objective is to tackle real world issues. The real question is using this kind of blockchain technology the best way to tackle these real world issues? When Walmart got into using Hyperledger and building their own blockchain system for supply chain management, sounds good, because at the end of the day, the pitch is, as a consumer, you want to know where your banana came from.
right.
Now, you can go and get Banana Coin. This was a real thing.
Oh, God.
Right? This is how I knew we were at the top in the 2017 bull run. You went to one of the biggest conferences, and there was literally like a banana coin. So you can count on Banana Coin,
Yeah.
or Walmart, which sort of has major influence. They can help you track it. But the real question is, how is a blockchain helping even a Walmart track the provenance of a banana? Because blockchains don't know anything about the real world. So how do I track a banana? I still am trusting every person who says, now it was picked here. I got to trust a human. It went from here to here. I got to trust a human. Now, once it's on the chain, I see it was there, but how do I know what was put on the chain is real? You get what I'm saying?
Yeah.
So yeah, they try to solve real world problems, but the question always becomes, do you need a blockchain for that? Do you need crypto for that? Do you need a smart contract for that? Or can you just use a database? Most of the times you could just use a database. Do you need a blockchain? Do you need the same security and censorship resistant model you need for your generational wealth accrual? Do you need that level of security for to support a local artist?
Yeah, probably not.
Yeah, probably not. Right? So now saying we're going to have, art NFTs on Bitcoin. Can you do it? Sure. The technology, it can be used for that. And I take the position, as long as you're not breaking the rules, go for it. But is it worth the value? You're literally taking one Satoshi And right now, I don't know, I'm not good at the backwards math, but 1 Satoshi, you're still talking about a fraction of a penny. So you're taking a fraction of a penny. It's like you gave me an actual penny, and I put a picture on that penny, on top of the penny, and now that penny is worth $50,000. Now go sell this penny for $50,000. It's speculation all day. Is it worth doing that to a penny? Do I need to do that on sound money, or can I just create art on some other kind of coinage that isn't money and have it still have value, but not need to tap into this huge value security system to do it? Versus if you're talking about real estate.
So then why are people trying to do that?
Because
just to like ride the Bitcoin name?
Well, no, I wouldn't say it's just to ride a Bitcoin. It's reasons. Most of it's speculation. Some people it's just because I can. What does Alfred say? Some people just want to see the world burn. Who knows? But like free speech, right? That means I gotta like speech I hate if I really want free speech. If you want free money, I even gotta like the money usage I hate if I want free usage money, right? And if you want a world computer, you have to do computing systems that you hate, or you have to build it into the infrastructure. Economics, I think one of the last things I'll point out, a really clear case of bad economic thinking, tokenomic thinking, is with NFTs and artists. And one of the biggest things in the NFT space right now for artists is being able to pull recurring royalties. I make an NFT, I sell it to you for this base amount, then when you sell it, I get a cut every time you sell.
Right.
That is not baked into any layer 1 or layer 2 protocol. That is literally a marketplace only rule. Oh, wow. Which means you don't have, it's not built in, you can't enforce it. It's unenforceable without rapidly centralizing and taking control of how your token, your NFT is distributed. But if you're going to do that, why do you need an NFT in the first place again?
Yeah.
Just issue it on some kind of digital ledger thing and give out a token like a Starbucks coin or whatever that they've been doing for years. You don't need all of that if you're going to revert it. Not to mention, it just doesn't make sense. The whole recurring artist thing. And it's like
I feel
Ford
like something's really clicking, but I'm like not sure what. But I feel like I, like so basically, like I feel the wheels turning. But so essentially, like for a coin to have solid tokenomics or like reason to exist, the blockchain should be improving it should it be improving its security as like the part of like the main purpose?
If I'm interpreting what you're saying correctly, I would agree. An advantage of using some kind of peer-to-peer decentralized system like a blockchain, like an Ethereum, is you can build autonomous functionality into these chains, removing third parties, censorship resistant, permissionless, transparent, right? You can bake these economics into the protocol. So with anything else, with traditional banking, with traditional real estate, with traditional anything, you got to trust some kind of institution at some point. You can bake institutional trust into math. And that way you're not at the whims of whatever human is there anymore. It's a pre-agreed upon rule set that can't be changed without massive consensus. You can't change the rules halfway through like your insurance policy does, right? It's baked in.
Yeah.
But it has to be baked in. That's the whole point of using these systems. If it's not baked in, then why are you don't need the system.
Yeah.
Right?
So
in my
like
opinion,
something like a meme coin, like there's.
Well, yeah, but it's just that. It's a meme coin, like Dogecoin, the whole buy-in with Dogecoin, right?
Yeah.
It was meant to be a criticism of Bitcoin.
Right.
It's like Monopoly.
So like the tokenomics.
Dogecoin is monopoly. Monopoly was built to be a criticism of how the U.S. economic capitalist system worked.
Yeah.
And then people was like, no, this is how you live life. You play Monopoly. Buy as much as you can, accumulate. It's like, no, that's the opposite intent.
Yeah.
Dogecoin was the same thing. It was the opposite of intent. Bitcoin was meant to be sound money. Dogecoin was meant to be the opposite of that. And now people are buying it because it's sound money, because Elon said so.
Yeah.
They're not thinking through the economics.
So like the tokenomics on that, like, don't make sense, basically.
Well, no.
Even though they are making
Dogecoin, no, it doesn't. I'll let people go and. Matter of fact, it's everybody's homework. Go look into. Don't just look at the price or the supply. Go look into the issuance, how Dogecoin operates, what it really does, and then tell me about how Dogecoin hits $1, and how that's beyond speculation. Because anything can do anything on speculation, right? This is what Tulip Mania, this is what bubbles and all that is about.
Okay.
Beyond speculative, hoping to sell it to somebody else at a higher price, which is the worst economic design for sustainable systems. What is the purpose of Dogecoin as is? I'm not looking for you to answer, but that's everybody's homework.
So what is the purpose? What? Okay, I'm writing this down too, because I'm going to do my homework too. So
there it is. And that, in its scope, without going too deep into depth, deeper into depth on all of it.
Yeah.
That is tokenomics. Now, pretty much every sentence we said could be its own hour-long show.
Yeah, I think that's why my brain is like melting over here. Like I feel like I'm telling you, like there are things that are clicking, but like I'm not. There's so many more questions that it's just running on overload right now.
Yeah, I think if anybody has to walk away with one takeaway, it's that tokenomics doesn't exist. Economics exists, right? And you have to be able to play by the rules of economics. The only thing that makes tokenomics different is how do you do economics without a central authority, which is, I'm not even gonna say this is like new, but it's not popular. It's never been a popular way to do it. We always have, societies throughout history have always converged to a central authority to do it. This system is, how do you do it without a central authority? Those are the challenges. And you got to think of things that have never been thought of. It's a field of study nobody thinks of, and maybe you're not a programmer, but you're really good at math and you like doing economics, and you're like, well, how do I get involved? I'm not a programmer. We need people to figure this out and write books and do studies and do research. Here's a way in without having to code. So there it is. What is this? What are tokenomics in the economy of blockchains?
Yeah, you broke my brain.
There it is. We broke all our brains. So if you have questions around it, right? This is a show we can dive deeper into. Yeah. So I think, speaking for both of us here, I think we'd love to hear your thoughts on it. So hit us up on our social media, which we are where?
Facebook, TikTok, YouTube. Are we on Twitter?
We are on Twitter.
We're on Twitter.
Yeah.
I'm telling you, you broke my brain. I'm not kidding. Like,
yep. So
I don't know what's happening right now.
We're the Blockument on all those platforms. So hit us up there. Ask questions. Check out theblockument.com. I'll have. I don't even know if I can have enough space for all the resources, but we'll have some resources up. So if you go to theblockument.com, we'll have some things on tokenomics, economic design, on both general issues plus basic crypto blockchain-based issues. Plus, you'll get links to where you can listen to the show, Apple, Spotify,
Android,
pretty much anywhere you can hear a podcast, the YouTube. Don't forget to check out, we have our exclusive Block Notes after show that'll be on YouTube.
I have a feeling it's going to be interesting.
Soon. So yeah, this could be interesting. We want to get deeper in, especially as I dive deep into my breakfast bourbons.
Yeah. I think that's probably what's not helping my situation over here.
Yeah. So check us out. We'll be back in a couple of weeks. The Blockument, theblockument.com.
Yep.
All right. Come for the riches.
Stay for the revolution.
All right. Peace.
Oh, boy.